Welcome to View from the Markets. This week we're joined by Anthony Bolton, President of Investments at Fidelity International. Anthony, welcome.
Thank you. Good to be with you.
Now, you're known for your stellar returns over 18 years in the West and a contrarian style of investing. Have you been able to replicate that so far here, or have you had to adjust your approach?
Yeah, I mean, in terms of returns, it's too early to tell, and obviously the last few months the markets have not been going up, which in fact for investing money has actually been quite a good environment to invest, particularly when you're buying some less liquid. My approach is broadly the same, although there's one difference. There are two broad types of companies that I've invested in here. The first is very much what I did in the West, finding companies that I think are substantially misvalued. Interesting, I found companies that seem to be more cheaply valued than their Western counterparts, which I've been quite surprised at, particularly in the medium and smaller sized companies. But the second area is looking for companies that I think can grow very substantially over the next 5 to 10 years, which look like companies that I invested in the West, but are at a much earlier stage in the development. You know, I've looked, one of my criteria, has this business proposition worked in the West? And if it has worked in the West, then if I can see something that looks similar here, and I think it's got very strong growth ahead of it, then I'm prepared to buy it. Now, for those, often I have to pay a bit above Western valuations, not necessarily a huge premium to Western valuations, but I think given the growth rate that's attractive.
And which particular sectors have you focused on so far?
So my thesis before I came was that China was changing, and the driver of growth in the future was going to be much more about the domestic economy than it was about exports. I think the golden era for exports is coming to a conclusion, and now it's going to be very much more the domestic economy, domestic consumer that's going to drive the market. So I'm heavily orientated towards the sectors that are plays, as it were, on this growth of the domestic economy. So this would include the financials in general, which are domestic shares. It would include a lot of the retailing companies. It would include things like service businesses. I think that's going to be a big growth area. So things like pharmaceuticals, etc. But consumer in a fairly broad sense. So, you know, it might be wines and spirits. It might be certain types of auto companies. You know, quite a broad range.
Now, are there any sectors that you've decided to avoid?
Yeah, I mean, I've not got a sort of a policy where I say never, you know, there's some sectors that I'm never going to invest in, but I've definitely underweighted. For some time, I've not been that keen on the commodity sector. I think in a lower growth world, you know, commodities have done terribly well in the first leg of the bull market. They did very well in the last bull market. I felt for some time they won't be the leaders of this bull market. So generally, I'm pretty underweight in commodities, including the oil sector. I'm not so keen, as I was saying, on the exporters, the heavy manufacturing type companies. So I'm generally light on those. So I focused, as I say, much more on the domestic side. Interesting, something like telecom, I'm not overweight there, but I've probably got a higher weighting than many international managers have. Telecom tends to be one of the least loved sectors globally, and as a contrarian, that attracts me towards it.
One of your key focuses is looking for the under-researched companies, the small to medium ones that are undervalued and could have the best performance in the future. How difficult is it to gather intelligence on these Chinese companies?
I've not found it. I mean, there are some which are opaque and less willing to meet investors, but I found in general most of them are quite willing to meet and talk about the business and are frustrated about the valuation of their shares. What I found really interesting, though, particularly in the smaller stocks, I can find companies that have very little, in some cases no broker research on them at all. Now, you know, in the West, you'd always have somebody follow a company and write research on it. While I find here a number of instances where there is research, but it can be a year or more out of date. And I just think the opportunities for finding things that other people haven't come across is much greater.
So what kind of impressions have you had of the quality of management out here and corporate governance among these companies?
Yeah, that's obviously one of the key issues that I've focused on, and I think it's variable, to be honest, and working out, which are the stories that are believable where you're being told the reality and where they're bulling up a story or, putting a lot of spin on it is important. And looking at the checks and balances, the corporate governance, etc., is something else. Now, often to check those things, you hear from the company, but you then have to use other sources to cross-check whether what you're hearing from the company is actually, the reality or not. The
mainland Chinese stock market has lost about a quarter of its value since the start of the year. Where do you see it going from here? In my general view of the world, I think we've had the first part of this bull market. I've said for some time I thought it was going to be a multi-year bull market. I think we're in the first major consolidation phase. All bull markets have that, and they go on for a few months. But I think there's another leg to the bull market that I think will start later this year. Specifically on China and say the A shares. I mean, the A shares have actually been going down for a year. I mean, that's a long time. Cash positions are high. Again, I watch these sentiment indicators, and as a contrarian, that's all very good news to me. That suggests to me it's not a time to be cautious, it's a time to be optimistic. And I think what you might see later this year is the Chinese have been tightening their policy. I think you might see some easing of that tightening. And I think that could be the catalyst that creates the next stage of the bull market. Are you worried about this whole project, investing in China, after your 18 stellar years in the West? Are you worried that you might finally become unstuck?
Yeah, people have asked me that. Anthony, why did you take it on? Because surely the upside isn't great, and if it doesn't work out, the downside for you. Now, I passionately believe in the opportunities in China in the medium to long term. I'm not saying you're going to make money in 6 months, and if I can play a part of taking more Western money, and that's my fund has been mainly supported by British investors, if I can get them to have a bit more in what I think is going to be one of the great investment stories over the next decade, then hopefully I will have done something. If I'm wrong, of course, then I'm wrong. But my view is that people should have more exposure to emerging markets like China.
Anthony, thank you for joining us.
My pleasure.